This is how rich people pay less tax than you do. Do you want to know the secret? Family trust. As a registered tax agent and chartered accountant, I've worked with some of the wealthiest clients around Australia. I'm not talking just millionaires, but I'm talking in some cases even billionaires. And one thing that they all have in common is, that's right, you guessed it, they have a family trust. And in some cases, they might even have more than one. I've even seen structures where there's more than 10 family trusts. So if the rich are doing it, there must be some sort of benefit to it, right? Well, good news is that anybody can get a family trust, not just Gina Reinhardt. And even better news is that it's simple to set up. We do this for our clients all the time. And once set up, they can last a lifetime and even be passed on to your children. So what are the tax benefits? Well, let's get into it. So here's a typical diagram of a family trust. At the top, you have the trustee company, Jacobson Pty Ltd, and the trustee company controls the assets of the trust, the Jacobson Family Trust. And below the trust here, you have the beneficiaries, who in this case are husband and wife, who, by the way, are also the directors and shareholders of the trustee company. So let's look at an example. Say that the trust owns some shares and the shares pay out a dividend of $45,000 in taxable income. Well, the trustee of the family trust, in this case, you and your wife, or vice versa as directors of the trustee company, have the discretion to decide how they want to distribute the income. Well, you may have heard of a discretionary trust before. Well, a family trust is just another form of a discretionary trust. So this is where the magic happens. Instead of splitting this $45,000 in dividends 50-50 between both individuals, you can now decide who you want to distribute the income to and potentially distribute to the individual in the lower tax bracket. Say, for example, the husband is earning $200,000 in taxable income and paying tax at 47%, whereas the wife is not earning any taxable income at all. Then what you can do is distribute all of this $45,000 to the wife. Instead of paying $21,000 in tax if you distribute it to the husband at the top marginal rate of 47%, you only end up paying $4,000 in tax if you distribute it to the wife. Why? Because she's in the tax-free threshold for the first $18,200, and then she's only paying 16 cents on the dollar for every dollar above $18,200 up to $45,000. So as you can see, there are massive tax savings available. And what's important is that you do proper tax planning with your accountant so that they can help you determine who it makes most sense to distribute the income to. And also there are other important considerations that you must be aware of, including what happens when the trust makes a loss, or how you can go about distributing to children, and much more. Reach out to me directly if you want to learn how to set up a trust the right way. Like this video and write a comment if you thought about a family trust.